Basel III has been a big topic of discussion at Cybos this year. How is it going to impact trade finance?
Obviously, this is a big concern in the industry. We want to make sure that there is sufficient capacity in the trade finance world in order to accommodate the growth in international trade and the needs of importers and exporters to be able to manage their risk and to be able to manage their cash flow, and this would certainly have an impact on that. So there are many efforts that are underway across the industry and in other circles in order to be able to address some of the concerns of the regulators. I truly believe that trade risk is relatively lower risk than many other forms of either lending or other risk products that banks might engage in, and therefore justifies a different risk treatment from a regulatory or a capital perspective. And so there are efforts underway to prove that risk is different and therefore should be treated differently. So I'm optimistic that we'll be able to make some headway. Now, having said that, regardless, banks need to get better at measuring and managing trade risk. We need to find ways to better manage our balance sheet and to distribute risk and tap capital markets in order to accommodate what is now really a growth business again. So that's going to happen either way. We'll get more and more innovative over time as an industry, but it's also essential that at the same time we have appropriate, prudent, and globally consistent regulatory standards that also measure trade risk and give it the appropriate differentiated treatment that it deserves relative to other forms of risk.
How can banks reconcile increased limits on bank leverage while meeting the G20's demands for promoting trade as a growth engine?
Well, there have been many things that have happened already. I think many treasuries have found ways of tapping a lot of the innovations in the trade finance industry that have happened over the last 5 or 10 years in order to improve their working capital, to get better visibility, both in the trade finance and cash management worlds. There's been e-invoicing initiatives, there have been initiatives around better managing or automating the exchange of trade documents as data, better reporting of information across various activities, and of course there's all of the financial supply chain initiatives that have enabled, where banks have enabled bigger, larger, more creditworthy clients to inject liquidity into their supply chain, to get more flexible finance at better rates to their suppliers or their distributors than would otherwise be possible. So we've seen many treasury functions use these various tools in order to better manage their own cash flow and to help improve their relationships and the standing of their trading partners. Now, having said all that, this has not been easy. There have been many complexities and challenges. Logistically, it's been very difficult to onboard on scale thousands of trading partners across multiple geographies, to be able to structure these facilities in ways that meet stringent accounting requirements and legal requirements cross-border. But there have been many initiatives within the banking community and within the corporate community to deal with those challenges. So we've seen a lot of benefits. The Treasury Departments that we've seen with the most success usually have a clear mandate to improve working capital metrics, and they are able to manage across their various departments and their trading partners in a very coordinated, project-oriented way. But we're still in early days for all of this, so the imperative is on the banks, the corporate community at large, to be able to continuously improve the proposition, so to be able to offer platforms that have a wide range of end-to-end working capital and supply chain functionality to give visibility across the process. There are initiatives to improve the way trading partners are onboarded in a faster, more efficient way. There are initiatives to improve risk models in order for credit to be extended in a more flexible way at better and better prices that take advantage of the different stages of the working capital cycle, and therefore improving cash flow, helping companies manage risk and just trade more efficiently and be able to grow. So these things have happened, they continue to happen, and there's a lot more to do. It's a very exciting front, and I'm very encouraged by the progress so far.
The financial supply chain is divided amongst a lot of multiple providers of financing, payments and processing. It's a complex web of transactions. But given this, how can Treasury Departments improve their transparency and control of their cash flows?
In the area of trade broadly, well, we're a leading trade bank, and we continue to build on the strengths we have, which is a very large client franchise around the world. We have an incredibly extensive global network and very, very high service standards that we deliver to our clients. And we are always looking to improve upon that and broaden the product range and raise service levels in order to meet the increasing demands of our clients, which I'm happy to say is a growth industry, and we've got to continue to grow. We have specific initiatives and focus around being able to improve our capacity to be able to accommodate that growth as a leading trade bank. We're doing that through improved risk models that appropriately measure the different kinds of trade risk, especially the newer kinds of trade risk in the supply chain area. We are improving the ways we syndicate and working within a multi-bank environment and tapping capital markets to accommodate the growth, particularly in the financial supply chain space again. Just generally broadening all of those capabilities as one of the leaders in this business. We think that the innovative trade banks with scale will be the ones that can lead this market, and partnering with other banks that also play an essential role in the trade business and accommodating the growth that we expect to continue for some time.
So the recent announcement of the partnership with Standard Bank for the trade services utility is an example of this?
Yes, an example of the trade service utility, which I think you're pointing out, I think is another innovation in the business that will help our clients improve their efficiency and help us to extend finance in more creative ways. And the imperative is on the banks to be able to collaborate in order to make respective networks available to our clients, as in the case of that announcement, and improve service and offerings around the world.